Welcome back, traders. In this particular video, we are going to be diving into a powerful concept that can give you a significant edge in your trading, and that concept is histogram divergence. All right, so we're going to be talking about histogram divergence in this video. Right, we're going to be talking about histogram divergence in this video. If you're ready to learn how to spot hidden momentum shifts and trend reversals, stick around. All right, now before we get started, don't forget to like this video and subscribe to the channel for more actionable trading strategies and insights. Okay, now let's jump right in. So what exactly is histogram divergence? Okay, I'm just going to be adding one of the popular indicators usually used for spotting divergence, and that is the MACD. Okay, so as we are talking about histogram divergence, we need to be seeing it practically, right? So just to explain what histogram divergence is, it's a concept that occurs when the price action of an asset moves in one direction, but the histogram from a technical indicator like the MACD. Now, it doesn't mean that MACD is the only indicator used. Yes, some individuals, some traders use stochastic oscillator, RSI. There are a variety of indicators that you can use, momentum indicators actually, for spotting divergences. Okay, so basically, whenever you have the price action moving in one direction, let's just see if we can spot something like that real quick. Let's see if we can have perhaps a quick example. All right, we can see we were having price action. In this case, we can see that we were having the price action moving in the downward direction, and we had, the histogram from the MACD moving in the opposite direction. Now, this is what we call a bullish divergence. Okay, this mismatch between price and momentum can indicate that the current trend is losing strength. Okay, and a reversal or slowdown may be on the horizon. Now let us break that down. Okay, the histogram is a visual representation of the difference between an indicator's signal line and its main line. That is what the histogram represents. All right, now when the histogram diverges from price action, now we're talking about price action, we're talking about what you see here, the kind of movement that the candlesticks display. All right, so when the histogram diverges from the price action, it's a signal that something unusual is happening beneath the surface. Okay, so there are two main types of divergence. We have bullish divergence and bearish divergence. Okay, so let us start with bullish divergence. Now, this happens when the price of an asset is making lower lows, just like this example that I gave here, right? You can see that the price of the asset was making lower lows, but the histogram is making higher lows. Can you see that? You can see that we had lower lows here. This was a low and this was a lower low. And then the histogram bars, we can see that we had a low here and this was a higher low. All right. So in simple terms, when the price appears to be in a downtrend, the histogram is telling you that bearish momentum is weakening. Okay, so this could signal a potential reversal to the upside, and we can see that shortly afterwards we actually had a reversal to the upside. So basically that is it. All right, now let us talk about bearish divergence. Let's see if we can spot a bearish divergence real quick. All right, bearish divergence basically is the opposite, right? It is just the opposite. Okay, it's the opposite of the bullish divergence, right? Bearish divergence occurs when the price is making higher highs, but the histogram is making lower highs. Okay, when price is making higher highs, okay, I think we have found one bearish divergence pattern here. Okay, so you can see that the price was making higher highs here, and you can see that the histogram bars we are making lower highs. Can you see that? So this is what we call a bearish divergence. In this case, bullish momentum is fading, right? Bullish momentum is fading, and the price may be heading for a reversal to the downside. And as you can see, just shortly afterwards, we had a reversal to the downside. Now, understanding these divergences is critical because they give you an early warning, an early warning sign of possible changes in the trend. Now, how do you actually spot histogram divergence on a chart? Now, the first thing you have to do is to use the right indicators. As you can see, I'm using the MACD indicator. Now, the MACD histogram is one of the most popular tools for identifying divergence. You'll want to add it to your chart, alongside price action and all of that, right? Secondly, after you have added the right indicator to your chart, in this case, the MACD, the next thing for you to do is to look for a mismatch, right? Watch for discrepancies between the highs or lows of the price and the histogram. Now, if they are moving in opposite directions, you've likely found divergence, right? And then finally, you have to combine with other tools, okay? While histogram divergence is powerful, it's not foolproof, okay? So combine it with other indicators such as support and resistance levels. You can also make use of RSI or moving averages just for confirmation, right? To confirm your analysis, okay? And then when you talk about histogram divergence, you should also know the kind of situations where it is most effective. All right. So first of all, the effectiveness of histogram divergences can be affected when it comes to reversals, right? So when it comes to trend reversal points, divergence is often an early signal of a trend reversal. Let's see that real quick. This is a resistance, right? This is a resistance zone right here. And then this was a bullish trend, right? This was a bullish trend. It got all the way to the resistance. And then around the point of getting to the resistance, that was where we had, getting close to the resistance, because you can see that the divergence actually started around here. So getting towards the resistance, we already had the divergence pattern beginning to form, okay? So divergence is often an early signal of trend reversal, making it a great tool for swing traders or those looking to capitalize on momentum shifts, because when you notice a bearish divergence pattern happening around the resistance, it gives you an extra confirmation that that bearish reversal is likely going to happen. On the flip side, when you notice a bullish divergence pattern forming around a support, as you can see in this scenario, we can see that we had a sell trend. This was a sell trend, right? It was a sell trend, and when the price got to the support, or when it was getting towards the support, this major support, as it was tending towards it, we can see that the bullish divergence already began to form. So when you notice a bullish divergence forming close to a support, it can give you an additional layer of confidence that that bullish reversal is likely going to happen. Now, another scenario is in terms of momentum analysis. Okay, histogram divergence is effective in momentum analysis. You can use it to assess whether the current trend still has strength or is losing steam. Of course, when you notice a bearish trend is prevailing, and suddenly you notice discrepancies between the price movement and the histogram bars. Price is making lower lows rather, and histogram bar is making higher lows. It shows that the bearish trend is losing momentum. That's in the case of a bullish divergence. In the case of a bearish divergence, when you notice the discrepancies and you see that the price is making higher highs, but the histogram bars are making lower highs, it shows that the bullish momentum is getting weak. All right. Another scenario or situation where histogram divergence is effective is entry and exit points. All right. Divergence can help you time your trades, whether you are entering a new position or looking to exit an existing one. All right. However, remember that not all divergences lead to reversals. It's important to point that out. Some might just indicate a temporary slowdown. So always use proper risk management. All right. Always use proper risk management. It is very important. Now, here are a few tips to make the most of histogram divergence. First of all, be patient. All right. Divergence does not guarantee an immediate reversal. So wait for confirmation before acting on the signal. Secondly, use multiple time frames. Okay. You can check for divergence on different time frames to get a clearer picture of market dynamics. Now, this is the 1 hour time frame, right? You can just decide to go to, another time frame, perhaps a higher time frame, a lower time frame, to get a better picture. For example, we identified divergence on a 1 hour chart, right? Let us just do a real quick example. We identified the divergence on the 1 hour chart. So if we want to look at the bigger picture, we can go to the 4 hours chart to find out what is happening there. Okay, so we can see that on the 4 hour chart, right? On the 4 hour chart, the divergence did not happen on the 4 hours. It was on the 1 hour that it happened. But on the 4 hour chart, we can see that the price was around a resistance. And not only that, we can see a head and shoulders pattern, on the 4 hour chart. Can you see that? You can see that we had this is a shoulder, this is the head. And the first shoulder and the head was what coincided with the higher highs on the 1 hour chart. So the second shoulder was yet to form at this time. But if you have knowledge of chart patterns, then you might have predicted the possibility of this being a head and shoulders pattern, because we can see that as this price got to this point, right? As the price got to this point, it got rejected, right? It got rejected. So we have our neckline somewhere around here. Right? So looking at the bigger picture, you would see that there is also a state of, would I call it a state of uncertainty on the 4 hour chart, showing that there could possibly be a reversal. In as much as it was not very clear, but seeing a pattern that indicates a possible reversal can give you an extra layer of confirmation that the bearish divergence you just found on the 1 hour chart could be valid. Okay, so it's important to also check time frames, different time frames, just to get additional pictures, right? To get additional pictures as to the possible direction of the price. And then finally, combine with price action. Okay, let's just get back to the 1 hour chart. It's important to combine with price action. Look for divergence near key support and resistance levels. Alright, like I already mentioned, you can see this is a resistance level. So when you notice a bearish divergence happening around the resistance level, it can give you, extra layer of confidence. And then in the case of a bullish divergence happening around support level, it can give you an additional layer of confidence. All right, for stronger signals. So that is everything you need to know about histogram divergence. By learning to spot these signals, you can better anticipate market movements and make more informed trading decisions. All right. If you found this video helpful, don't forget to hit that like button and subscribe for more content like this. Let me know in the comments if you've used histogram divergence in your trading and how it's worked for you. Thank you for watching, and I'll see you in the next video. Until then, happy trading.